Welcome back to Instables, everyone. So I'm going to go up for you guys in the S&P 500. Again, this is the SPY. Again, Fed rate hikes does predicate exactly what might happen here. So I'm going to go over this with you guys. Now, before I jump into this, all I ask in return is you smash that like button and hit subscribe if you want to see more chart updates every single day that I mentioned throughout the week. Again, if you are a day trader or you're just tired of looking at the market all throughout the day and you'd rather have somebody do it for you, go to instables.com in the description below. And only for $15 a month, you guys will never miss a breakout alert today again. So let's jump into this one. So jumping into the daily chart with you guys here, as you guys can see, again, we do have our previous level that we have been looking to see if we are going to drop down below or if we are going to hold. As you guys can see, we do have our 410 level here on the SPY. This was when Russia initially attacked Ukraine. So the question this last week has been, are we going to drop down below that level? We did have a lot of consolidation within this level, showing us that this is a very key level that we were trying to hold. And as you guys can see, we are still holding it at this point in time. The question is, are we going to hold that leading into Fed rate hikes on Wednesday? Are we going to drop down below that? We may have a bounce before Fed rate hikes before we get to that 410 level, or if we do continue on lower, we will be looking at our $400 level. We did mention previously that we are within a channel here, and if we do continue on further down, then I do expect us to bounce off of the lower end of this channel. As you guys can see, we did get rejected to the upside exactly at this point. So if we do continue on further down, then we are going to be looking to see if we can bounce off of this level. We do have our 20-day moving average that we were looking to see if we can cross above our 50 with. We did cross above, but as you guys can see, we are curling down. And if we do get our 20-day moving average to cross below our 50, which in my opinion is our leading indicator going into this week, then we could continue on lower. So we will be watching out for that. And as you guys can see on our Bollinger Bands, we are pointing to the downside. So it does show us that we still could continue on lower. And as you guys can see, our RSI is not oversold completely. We still could continue on further down because we are pointing down. So again, pointing down does show us that we still could continue on further down. So we will be looking to see if we do hold being oversold or if we do drop down below our previous oversold point. And we will be looking for divergence at that point in time when we do reach the lower end of our channel here. Now, one thing that is signaling a lot of bearish momentum is that we do have an increase in sell volume above a lot of previous volume points that we've had. So if we do continue on with that sell volume, then we could continue on below 410. But again, very much testing this level. So we will see if we do drop down below that, if we do hold below it. Now, looking at the MACD here, as you guys can see, we are pointing down. We do have an increase in sell pressure. If we do continue on with this sell pressure and we drop down below our previous sell pressure points, that could be a very good indicator for a possible major move down. So again, watching these indicators are going to be very key. So again, we're watching for two things this week, that 410 level and to see if we are going to hold our 20 over our 50. Now, going into Fed rate hikes, the question is, are we going to have a 50-point base rate hike? Are we going to have a 75-point base rate hike? Are we going to have a 100-point base rate hike? Again, previously we had a 25-point base rate hike, which in my opinion, the Feds are very much behind inflation. So we need to make sure we do, in my opinion, have a larger increase sooner rather than later, in my opinion. I'd rather get the pain out of the way. So again, if you guys do remember, a couple weeks ago, Jerome Powell admitted that we're going to have a 50-point base rate hike, which in my opinion is better that we get it out of the way if we need to. So for now, the market has been pricing in a 50-point base rate hike and a possible 75-point base rate hike. So we'll see exactly what the Feds have to say. And again, if they do mention anything about increases in balance sheet runoffs, that would be also very bearish. So looking out for those two things coming into this Wednesday. Now, again, with that said, if you guys are day traders or you are looking for intraday perspective breakouts throughout the day, we mentioned major breakouts like RDBX and CYN. We mentioned ATER on their run up a couple weeks ago. Go to instables.com in the description below if you do want to see all of our alerts that we mentioned throughout the week. And again, all of you instables that support the channel every single day, we will continue to go at it. Let the plays come to us. Again, staying patient leading into this Wednesday's Fed rate hike, of course, is going to be very key. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.